Hey everybody, I hope you're doing well. Today we're going to cover the triple Qs for the week of November 9th. Just a quick thing on how we do the analysis. We use big data and AI to predict a company's performance, and we do that for 94% of the total companies that make up the triple Q. We only look at companies that are either US or European based, and we've been tracking data and collecting data on these companies since 2007. So let's jump into it. So what's the net? So this week, we feel it's going to be a bull market for the following reasons. One is hiring for companies that are in the triple Q, pre-COVID levels. It appears that for Q4, they're expecting big growth. And that's reason three. But they're certainly ramping up like there are COVID's done, election's done, might get some stimulus, but they're really starting to ramp up for either their current quarter or the next 12 months. But they appear to be growing rapidly and making new investments, which is great. And it seems to be backed up by other market analyst reviews over the last couple of days. Stock volume is starting to get at normal levels. It's starting to go back up. There's a trough there, 3 weeks and up into the election, but it looks like stock volume last week after the election has started to exceed up. There's still a drag on the general market or the macroeconomic conditions. The election, COVID-19 at all-time highs, and stimulus will be unlikely this year. That's not my opinion. That's just what the news is stating, and the general consensus is that stimulus is unlikely this year. Let's take a look at who's doing earnings this week. So Cisco is announcing on November 12th. And they make up 1.28% of the total triple Q fund. So if they do bad or good, it'll probably have not a lot of impact on the market. Cisco generally has been hammered over the last couple months. Their stock is near an all-time low. But they're certainly growing in their current quarter, which isn't going to maybe part of an announcement as part of their Q3 as future guidance. But most companies have not been making future guidance. Also, from a option volume perspective, there seems to be a lot of calls on the strikes from 37 to 42. So people are bullish on Cisco and what they're going to announce this week. So next week, a biggie, NVIDIA. Their stock's near a 52-week high. They have high expectations. The challenge is that there's a lot of put activity on NVIDIA. So maybe people are expecting a pullback or some form of miss due to acquisition-related costs or something of that nature. But NVIDIA, like the others participating in the triple Q, are growing in their current quarter at a very good clip, a clip that hasn't been seen prior to this year. So NVIDIA is looking to still grow heavily. Workday, their stock price, we feel, based on our analysis, is outpacing their growth. They're not growing as rapidly as they did in 2019. Will that impact their quarter? Potentially. We've seen mixed results in this space over the last couple of earning announcements, SAP being the major one, which is the space that Workday participates in. There's no unusual option activity, so there's no really kind of leading indicators around that. But Workday, where they stand today, not at the same pace of growth as they were last year, but their stock price doesn't reflect that. Splunk, just like the rest, again, ramping up their Q4. There's not a whole lot of unusual option activity in this, although their options are really quite expensive. In their space, this has been mixed performance for companies that have announced over the last 2 weeks. Fortinet did well. IBM didn't do so well, so it's kind of a mix on how Splunk will perform. Certainly, future growth, they're acting like it's going to be gangbusters. So let's go on to unusual option activity. There's two companies. So Spotify has a call at the April 16th, 2021 expiration date at the 270 strike price with a 2.35 volume to interest ratio. And somebody bought a whole bunch of contracts at this space for $335K. So quite a bit of activity there on the long-term options. Marvell being on the put side for the May 21st, 2020 expiration at the 35 strike price at a whopping 12.04 volume to interest ratio, and they spent about $800K. There's other purchases throughout the week that was also related to that, but we're just talking about a specific incident or unusual option for a day, but there's been other for both. A lot of purchases happening around these two, expiration and strike price. So is it leading to something? I think people are feeling that there's going to be a pullback on Marvell and the microchip space, and Spotify, they seem to think it's maybe at a low and it's going to step up. Let's take a look at where we are historically from a stock price perspective. So the FANG, and I separate, or I should say prep2grow really separates our analysis between FANG Plus and others that make up the QQQ. The FANG Pluses are the ones that make up roughly 64% of the total fund for the QQQ. So if they move one way or the other, it's going to have a significant amount of impact on the price of the QQQ. They, as a collective whole, are about 26% away from their high. On the non-FANG Plus side, they're pretty close to their 52-week high. So if we look at growth opportunities within the QQQ, FANG Pluses that drive it, we feel that the FANG or the QQQ has room to grow because of the FANG Pluses that make up 64%. On the stock volume side, after the pre-election trough, volume for the FANG Pluses and the non-FANG Pluses are accelerating, which is good news after a lot of volatility and low volume. So let's take a look at what we feel is going to happen, or what we're predicting to happen. If we look at the 30-day option volume, one slide ahead, we're still in historical. The 30-day option volume supports kind of the movement from puts to calls. FANGs call increasing and puts are decreasing pretty dramatically. On the non-FANG Plus side, puts are pretty flat for the last 30 days, but there's a slight uptick in call volume. So that's good. So if we look at the future, prep2grow is predicting that calls are going up and puts are going down. And you can see this in the graph of the dotted line graphs. You start to see the curves in the yellow, and collectively puts are going up for the FANG Pluses and the others. If we look at what we think are the next 30 days going to be bear versus bulls, certainly calls outnumber puts, which hasn't happened for a while. We also have added over the last weeks stocks. So typically we only look at options as part of this weekly update. We're including stocks in this now. Now stocks we put in here, and if we look at options or we look at stocks, stocks are typically unfriendly options, or those companies that have low volume and low open interest, and so you don't really want to buy options in there. So now we've classified those as stocks, and we give them a directional guidance for that. In this case, if you look at the calls and the stocks collectively, they outnumber the puts, which is good for you bulls out there. So we expect that it's going to be, again, next 30 days predicted to be a bull market. Although historically, December has always been a slowdown in the stock market as a whole. So take that in consideration as you get into a near Thanksgiving timeframe. Predict a stock price, collective growth again within the FANG Pluses, the non-FANG Pluses, pretty flat. They're about a few percentage points away from their high. FANG Pluses still have some room to grow, which is again why we're predicting that there's going to be more bulls and bears within this. So in summary, we feel that the QQQs for the next 30 days are going to be more bullish than bearish, although there's some macroeconomic conditions that are occurring as part of that. Most of the growth that we're seeing is more future looking as part of their Q4. That should have some bleed off into their current quarter as projections and stuff starts to come out into the market. But again, take into consideration that near Thanksgiving and Christmas time, traditionally, it's a slowdown in the stock market, and stocks tend to pull back a bit during the December timeframe. Thank you for your time. We hope you enjoy the content. If you do enjoy it, please leave a like or a comment. But other than that, happy trading, and I hope you have a great week of trading.